If you're buying a house in 2025 or 2026, I want you to watch this video. I'm a licensed mortgage loan officer. And in the last 2 to 3 years, I've seen people make some of the worst decisions possible with buying a house. Now they stuck in a house that they can't afford or stuck in a house that they can't sell because there's not enough equity, because they overpaid, they follow outdated advice, and they weren't playing the game thinking like an investor. That is not going to be you, because you're going to listen to every single thing I tell you in this video. Number one, do not buy a house unless the seller pays your closing costs. And I know that's a bold statement. It may be controversial, but it is what it is. The reality is almost 80 to 90% of the transactions that I have been a part of in the last 2.5 to 3 years, the seller has paid the closing costs. The reason why is because houses are sitting on the market for longer. Interest rates are elevated. Home prices are elevated. So it's taking longer to move to move a house off the market. And because that's the case, you as a buyer, you have what's called negotiating power. This is one of the easiest ways to protect your cash on hand and lower your mortgage payment. So when you buy a house, your real estate agent needs to negotiate what's called a seller credit. That seller credit can cover closing costs, buying down your interest rate, a home warranty, and prepaid items like insurance and property taxes. Negotiating the seller credits is what's going to save you thousands of dollars at the closing table. Number two, permanently buy down your interest rate. I'm going to say something. I know I'm going to get in trouble, but it is what it is. The 2-1 buy down that folks were doing in 2022, 23, and last year, it was the biggest scam in the mortgage and real estate industry recently. The date the rate, marry the house, it was the dumbest thing ever. And I heard all the real estate agents telling people to do that. The builders were telling people to do that. The loan officers were telling people to do that. And it gave people fake comfort with an artificially lower mortgage payment for the first 2 years, and then boom, payment shock. And now these same people are struggling to make their mortgage payment because we in the real estate industry told these people that mortgage rates was going to go down in 2 to 3 years, but that did not happen. So how did that work out? It didn't work out. So you don't want to do a 2-1 buy down or a temporary interest rate buy down. You want to do a permanent buy down. That means your mortgage payment is not going to be fluctuating, right? So you don't want to do that. Number three, don't put more than 3 to 5% down on a mortgage. Anybody still listening to Dave Ramsey in 2025, please find something else to do with your time. You can't listen to outdated advice and expect to win in this market. Even if you got 20% saved up, don't use that money to put on a house. Do 3 to 5%. As long as you can afford that mortgage payment, put 3 to 5% down. In a lot of cases,